Good day, everybody. It's Greg Schnell. I am here with the weekly market review for January 24th, 2020. Thanks for taking the time to join me. We're going to cover off commodities today because they got smoked this week. There's all of my blog articles. If you're interested, please check them out. I also write weekly on Wealth 365. I don't have a specific page there, but you can find it in their articles tab. And then contact information, you can reach me, email newupdate at gregschnell.com, on Twitter at schnellinvestor, or on my website at gregschnell.com. So the agenda: momentum reaches huge extremes. The advanced decline lines are being tested in terms of the downside, so looking to see if that breaks through this week. Commodities definitely got curtailed. Energy on average was down 8.8%, so it got smoked. And a subscription sale at gregschnell.com, private investors tab. Select the annual membership button, and it's 40% off. So let's jump into the charts. Lots to cover off here. First of all, we're going to start with the advanced decline lines. And one of the things that I've noticed is that the trend in the advanced decline line is pretty important. And what we see here is this big uptrend. And if this is going to break this week, I think that would mark a meaningful change. I did have a couple of other indicators that I keep track of behind the scenes. And they triggered on this March warning, on this May warning, and on this August warning. Obviously, the March one was a very brief pullback, went on to higher highs. The other two were better indicators. So we've had that indicator hit this week. And so with that, I'm expecting more pullback coming. Looking at the NASDAQ high-low information, you can see we had a super surge here on the last week to kind of close things out, and then all of a sudden a plummet. I think that was just kind of an exhaustion rush, is kind of the way I would call that. The New York Composite did break its uptrend line this week, and we can see in terms of its advanced decline line, depending on which one you want to use, neither one of them are broken. So even if we got a pullback here for the next couple of weeks, 2 or 3 weeks back to the red line, that would probably be an interesting place to look for a get long. For the Dow Jones high-low indicator, what we're seeing here is we spiked up to a meaningful level just using an 11-period moving average, so that's a 2-week moving average. But we're up near some of these pinnacles where things get pretty meaningfully stretched and then probably have somewhat of a pullback. You can see back here there was a few of those too. So anyway, we're up at that high level right now. So watching that a little bit closer. And then here's the advanced decline percent for the S&P 1500. And what I will show you is that the trend line for that broke down off the October lows, still coming down to this big red trend line, the longest one here. And if that trend line was to break, obviously that would mark a much more meaningful correction. But the S&P 1500 has not broken its trend line, very close, but the 3-month period here has broke its trend line. So I'm expecting some pullback here to mark a correction. Looking at the Canadian market, the advanced decline information there, still somewhat bullish. I would say it's rolling over here, but obviously we don't have any big uptrend to kind of compare like we have in the American market. So not quite as rosy. I would say one thing here, if we were to put a trend line on price here and just draw this a little bit longer, we'll be watching to see if that can hold that 17,300 level. Whether or not it will, I'm not sure, but I think we can clean out these old pieces of data here. And on here, again, we haven't had much of a thrust on the advanced decline line. It's really narrowed out to almost nothing here, and kind of a surprise, actually, just how that chart has behaved so different from it any time in the past. And then looking in on the high-low data, we had this super spike here in Canada. One of the things I pointed out is it's very rare that this spikes up just by itself and then dies. We did have one back in 2013, but that was literally the launch of the major QE program, QE Infinity it was called. Anyway, in 2013, the Canadian market rallied down twice and then took off on a big run. The U.S. market didn't actually have those pullbacks in it. It just kept going straight up. So we'll see if the Canadian market is kind of setting up for this one-time surge. Again, it's after a 3-year period here of being suppressed. So the only place I can find that's back here is like that is this 2013 period. And we got a quick lift, and then market went sideways for almost a full quarter before that meaningfully changed. Anyway, watching to see what happens here. The high-low data, this is the Alexander-Elder method of adding all 5 days together. One of the things, we're up at a relatively high level last week, call it 2,900. And when you look across here, going back to 1995, this extreme level was only hit a few times, call it 10 times or something like that, over the last 25 years. So with that, we're in pretty rarefied air. Obviously, the period in 2003 coming off the major low and the period in 2009 coming off the major lows, I would say those would be expected. In the heady days of the 1995 to 2000, almost every indicator was super surging at that point in time. And then we have kind of the QE period, 2010, 2011, and 2013. So the one we got in late 2016 and late 2017, call it early 2018, right in there, both of those periods were relatively meaningful pullbacks, or meaningful uptrends that we were in. We had the zigzag at the beginning of 2018, so it's a pretty good indicator. But my main point would be we're in rarefied air there, very up a long way away. So now what I want to cover off, we're going to jump over into the commodity segment. And the point I want to make here is this is how commodities behaved over the last week. And needless to say, that was a pretty good shellacking. The nickel ETF dropped down 10%. The Canadian crude down 9%. So West Texas crude 7.5%. The U.S. XOP oil exploration and production ETF dropped by 8%. Like, it was crazy. Really, really hard hit. But I want to go through these charts here because they're setting up quite nicely. And I think it's an appropriate time to just kind of go through and review them all. So we're just going to look quickly at all of the commodities here. So one of the things I think is starting to become evident on Brent crude is we have this trend line right here. And so we're going to test that again coming up in the next week. If we use a line chart, so let's just save that one, and then just change it to a line chart, what you'll see here is that, this date is quite a bit away. And so if we use weekly closes for our information instead, we're pretty much on the trend line. And so this is a very important place this week to watch for. I don't want this market to break down, obviously. If we extend this trend line back, I wouldn't say it matches up nicely with any of the above here, unless we kind of swoop it up like that. I don't know, is that a valid trend line? It's definitely looking like a head and shoulders on a large 3-year time frame. But the more important part here is right now we're looking at this 1-year trend, and it looks like it's ready to crack. If we draw it out to a 4-year trend and obviously see that breakdown, that's pretty meaningful. And look how weak the PPO is here. This is in scary territory. We do not want to see a PPO roll over below zero. When that happens, typically what we see is the selling exacerbates itself or speeds up. And so when momentum clearly goes negative here, that would be a big deal. So this is pretty concerning. If we zoom in on this little point, you can see we're just barely above the histogram. The histogram's just barely above zero. So if all of this rolls over and falls below zero this week or next week, I think that's a very, very important place on the chart. So try not to let these get away. If crude starts to fail hard here, I think we're going to struggle quite a bit. Looking in on Canada's crude, so we have quite a price difference between the Canadian price of crude and the U.S. price of crude. This is an ETF that tracks the Canadian crude, but you can see it literally fell to 6-month lows here very quickly on Friday. The market was down quite hard, and part of it is on the back of the China if their economy's kind of locked down for a week or two, that could really suppress demand. So we're looking at some of this, but this is already falling below zero, so this is not what we wanted to see. And again, we got 3 lower highs here, so this is quite concerning from a head and shoulders topping perspective. However you want to look at it, this is quite concerning to see this start to break down here. So I'm expecting lower lows for Canadian crude. Looking in on cocoa, what we see here is this had broken out to a new high, a bit of a reversal bar this week, nothing too serious. It tried higher and closed lower, but still higher high and higher low. This could continue on here. So that chart doesn't look too bad. Looking at copper, this chart just got shell-shocked on Friday with a big move down this week of 5.5%. One of the concerns I've been struggling with over the last couple of weeks is the Shanghai chart hasn't really been moving up, but yet we've seen copper trying to inch higher. And then on weeks when the copper chart didn't move, the Shanghai would move. So the two weren't in sync, and both of them were in sync this week. The Shanghai, we only had one real trading day to look at, which was Monday, and then the market was closed for Chinese New Year. So with all of that, we've got quite an important period here where, depending on how big the coronavirus is, and again, it's happening somewhere else, so I'm not expecting that much of an impact on the U.S. market, other than for global demand. That's what bothers me. But we can see this trend line on copper here. And again, if we just switch it to a line chart, it'll probably make it a little clearer, so maybe I'll do that. The point, copper is a really important one, and the reason it's important is for global growth. Obviously, Google and all those companies have been able to get to $1 trillion, and it didn't really matter what the price of copper has done for the last 2 years. So I know a lot of people like to use the term, it's an economic demand. It's a clue towards economic demand or global manufacturing demand. I would just say that it doesn't matter how we slice this. This downtrend is broken. We're trying to fall below both moving averages here. It's rolling over right at zero. We've seen this movie before, and here's 1, here's 2. If we're doing it again here, and this is going to make another wave lower, that's a pretty meaningful problem. So I know a lot of people just want to tie it to the virus outbreak, but the problem is the chart hasn't been moving up for the last 4 or 5 weeks. We can see the histogram getting smaller here where momentum was waning. So as that's starting to happen, I think that's pretty critical. And in my members' newscasts, I've been talking specifically about the worrying condition of all of these commodities. So here's gasoline, and look at the momentum curve here. It's rolling over below zero. Still hasn't crossed its signal line. If we just turn on the Zoom thumbnail, I think we'll be able to see that it's outside that. But the point we want to make here is gasoline is also falling, and this is a U.S.-centric pretty much chart. So when this is starting to fail, I think this is a bigger issue. We're below both of the moving averages. We've got repeated lower highs here. So this is quite concerning in terms of economics. And starting to see this roll over below zero, this is not a place I wanted to see this chart fail. So not very excited about gasoline. Looking at gold, the gold chart was really interesting. And one of the reasons is when it continues to oscillate above zero, this is pretty bullish. And so we did break this trend line here. Maybe I should just make that line a little bit thicker. We did break this trend line here. And now what I would say, we have another trend line that we can kind of put in place, which is off these lows. And if this is going to start to roll over here, I'd be very concerned. The one thing we're trying to do is break out above this prior high from August, September, 1566. And we closed at 1571. So we're above those previous highs. We had the super shock here on the Iranian news, but one of the things that the gold stocks didn't really follow through on that. So now that the overall market, I think, might pause here and start to roll down, if that was going to be the case, perhaps this gives gold the impetus to go higher. But I really do suggest watching closely, because we're right here with the full stochastic already rolling over. And again, if we can break through these prior highs, this is a pretty bullish place. On the gold miners chart, it's more prominent. I would suggest this is some sort of a cup with handle here. And what that kind of means is we test going higher, we pull back and we don't pull back very deep, and then we take off to the upside. So if that was the case, obviously that would be better. And again, we want this to come back to near zero and reset and turn higher. So this is the good news about this particular setup, is that your stop can be relatively close. I would say the end of last week, either down here around the 28 level or the 27.5 level. And if we start to break below this 10-week moving average meaningfully, I think you want out of the trade. And if we don't, then you can stay in the trade. And a breakout, obviously to fresh highs here, would be quite bullish. So a lot of people are starting to position on the basis that the global move by the Federal Reserve or the central banks worldwide, what they're trying to do is create inflation. And one of the things that should happen is we should start to see gold rise in that environment. With that same thought, if it doesn't take off here, you want your stop relatively close. So I don't want to see this fall below the 10-week moving average again. So quite focused on that. And I don't know if you've ever looked at the U.S. debt clock or whatever, but we're now at a rate where we grow U.S. debt at $1 million every 30 seconds. So it's quite quick. And, the thought of reflating everything to get out of that is obviously pretty important. So there's a lot of pressure on the central banks to get inflation going again, and that inflation would help make this current mountain of debt look small by pushing everything else higher. If that doesn't happen, then we're sitting here with this big mountain of debt and not enough economic growth to kind of support the debt levels we've got. So that would create bigger issues. Anyway, all that to say, it's an important time to study these commodities. So here's the big picture on heating oil. And what do you see on this chart? I don't see anything I like. I see this big head and shoulders topping structure, and we broke down this week. This is terrible. And we see the arrow breaking down below zero, or the momentum breaking down below zero. Look at the volume that's come in here to start the selling for 3 weeks now. January 1, we had low sulfur diesel for shipping, maritime shipping. So they were using a bunker fuel, which is, I'll call it close to asphalt or pavement, really thick, heavy stuff. And it was quite environmentally unfriendly. That's polite. Now they're trying to use low sulfur diesel to power these marine ships, and that's a big change, but it'll add to their shipping costs. What you see here on this chart, I thought we might actually see a boost in diesel or heating oil. And what we're seeing here is that this 220 level just got stuck, and now we've plummeted below, and now we've broken a 3 or 4 year uptrend. Commodities tell a huge story about economic demand. So what you're going to see over and over here is that we're setting up for some precipitous falls on commodities. And I was quite bullish on the energy sector, but I did not expect to see this kind of dramatic reduction so quickly on both gasoline and diesel. So just to go back and show you the gasoline chart again, this chart has been making lower highs. It doesn't have that same trend line setup that we see in heating oil. I guess we could put this sort of a line in place and just say if this, let's pick it. I was picking it on this point here. Maybe that's a little too aggressive. Maybe we should use this kind of common bunker of lows down here. Anyway, we don't have a lot of room to move on gasoline. But we did break the uptrend that was in place from here. If we use a line chart, we'll see that. So let's just go get one. But the problem we have is if all of a sudden all of these commodities are going to start to break down, it's really important for investors to understand the implication of that. And one of the things I would say that is more important than ever is do not dismiss the value of commodities to tell us the global growth story. It's pretty important, and if that was going to start to weaken, we want to be aware of that. So try not to get talked out of believing in commodities. I know they don't reflect Google or Apple or Facebook or whatever, but a lot of the stocks in the market still rely on basic manufacturing, industrials, that kind of stuff. And if there's no economic demand for commodities, Obviously, that makes it different. Now we do have a PPO sell signal here on this or on this gasoline chart, and it looks to me like we're going to start breaking down here. Clearly, if that's the case, I think the bigger problem we've got coming up, this isn't a coronavirus thing. This thing has been going on since towards the end of December. So this is quite significant to notice that oil and gasoline, heating oil are all breaking down. Lithium, this chart has Tesla in it as one of the components. So one of the things to be aware of, the big rise in this chart might not be Tesla or might just be Tesla, but there are actually some other names in there. Albemarle is one of them that was pointed out by one of the readers of my work. But the bigger thing to be aware of here is if all of these commodities are going to slow, this might pull down and make a nice buying opportunity coming back to the 40-week, say at $26 or something like that. So lithium, clearly the downtrend has been broken and at least we're heading higher. Momentum doesn't look nearly as dire as it does with gasoline and diesel. Some could say that's the electric car conversion. I think that we're still valuing Tesla. So Ford gets a market cap of about $6,000 a car. Tesla's at $265,000 a car. So if you think Tesla's good value at this point, it's definitely up in the top of the range of price. Okay, here's lumber, and you can see lumber has been trying to break through this 444 level. We got to 444.40. We're going horizontal sideways here for the last month or so. The lumber stocks had actually started to move nicely in the last week or two. But what we need to continue to watch there is if the U.S. home building looks great, it looks tremendous. I think the new numbers coming out were very encouraging. I will say that Manhattan condos in New York right now, just the new condos alone is a 6-year supply. And a friend from Boston told me that the Boston market is exploding with condos, and when you travel around, there's a lot of condos under development. So it might not be the housing market that's got pressure on it, but there's definitely an abundance of real estate coming onto the market with a lot of optimism. And so that could be one of the things that starts to pressure us here. I will say on these marijuana names, I've just moved on the chart here. One of the things that's nice is we finally got an upturn in momentum here, and it was all in 1 week. We started to give it back last week, but let's watch this pull back a little bit. And if we start to get to hold around $8 here on average, that might make a much better entry for the marijuana names. They were pretty sparky last week. They jumped up 16% on average, and that huge jump would also imply that there was some short covering in there. So this week when it started to pull back, those short coverings weren't coming in so quick, and you still had some downside pressure. Here's natural gas, and one of the things on natural gas, you can see it just broke to new 3.5-year lows here. It wouldn't take very much to get down to $1.60. $1.60 is the 2016 low, and if we unwind the tape here, this is a meaningful low to watch for. We're already at the $1.90 down here, which was the 2012 low. So the real question, are we going to make another leg lower here on natural gas? And if so, that's pretty extreme. Anyway, we're down deep here on natural gas. I wouldn't say that I want to avoid it. I would say more than likely you're going to try and get some sort of a bounce coming up the next couple of weeks. So at least natural gas is a place to think about. But you're definitely buying the depths of despair there. This nickel chart, I think we can all see the trend line on this. Pretty straightforward. Even if it pulls down, you'd expect some sort of a bounce at $14. Looking in on rare earth metals, these tried to accelerate. Notice where this wave is. It's right at the 0 level. I want to be careful on this particular chart for that exact reason. If this is going to start to fail here, come down and maybe retest this $12 level, and let's take another look at it. So rare earths and lithiums, I don't want to say they're similar, but both of them are important in the development of electronic car technology, battery technology, all that kind of stuff. So if this rare earth metal is going to pull back, and a lot of people are talking about cobalt as an example, if this is going to pull back, it might give you a nice entry to get back in, but right now it looks like it wants to roll over right at zero here. So this is pretty cautionary, and I would be very careful hanging my hat in the rare earth metals this week with all of the commodities under pressure. Silver trying to do the same thing as gold, trying to turn up here in the same sort of area where we've had a run up, a pullback, and now can it generate enough strength to get going back up to the upside? And that's a pretty big question. Without question, the precious metals are the ones to watch this week. This silver miners chart is trying to hold up nicely. A breakout to the upside here, pretty important. The chart looks very good. And again, for silver miners, if it can break out and make new highs here, very nice. So this is a good place to get in, and if it breaks back below your 10-week moving average, that's probably an excellent stop to kick you out before the trade goes south at all. Soybeans tried to make a new 52-week high. Well, they did make a new 52-week high back in December and have now broken down and are looking kind of iffy. The momentum curve is rolling over just barely above zero, so that could be another area that we see some stress in. Steel, I was not happy with the price action at all, and much like these other commodities rolling over at zero again, this fell below its 10-week moving average and is trying to hold on the 40-week. But be very careful here with copper breaking down so hard, oil breaking down hard. We're starting to see some economic supply issues or economic demand issues, and if this is going to roll down hard here, be careful. Momentum right at zero is not very helpful. Let's go to crude oil, and I want to spend a little bit of time on crude. The big thing to watch for here, obviously, we've got a trend line coming off the lows. Maybe we should go to a weekly close chart. Let me just do that. And just grab the solid line instead. So this gets rid of the intra-week moves. But what we want to see here on this chart, obviously, is crude hold at support. And this is the 2016 low, major commodity low. And now we're down here, so you can see the implications, and we've got a horizontal support level around $52 that sits in here on crude for the last year. And if this is going to start to break, believe it or not, that line is straight. If this is going to start to break, what we want to watch for is breaking down below both to new 52-week lows and breaking the big 4-year uptrend. We've already seen that in some of the others. And those head and shoulder topping structure. Whoops, I'm really struggling here with getting that to close. So with this, one of the things I think we need to be paying attention to, obviously, here's the line for oil down here around $43, $45. If all of these start to roll over, we probably have a different economic demand picture than the globe is currently pricing in. And obviously, if China is a big part of that and all of a sudden they start to have an economic slowdown, we could see these commodity charts meaningfully drop. And again, I'm not wishing anybody bad news on the coronavirus. I would just say, some sort of low will come in around there and we'll get a chance to buy it. But my point would be, these charts have been breaking down for 3 weeks already. The coronavirus is only 1 week. So the question is, are we going to experience a big economic shock? And through all of this, I think it's pretty important to be aware of how all of the commodities are setting up in kind of a fail position here. So watch all of that very closely. As we head into the next week or two, we've got the Fed meeting on Wednesday. I think coming out of the Fed meeting, we probably will have some market volatility. So try and make sure you're just aware of the big setup here in commodities suggesting lower, and the Fed meeting. All of those things imply to me that we need to be very careful in the market here. So thanks for taking the time to join me. Remember, there's a sale on at GregChnell.com if you're interested in subscribership. And thanks for following my work. Have a good week and stay safe here in your trading. Thanks, everybody. Bye-bye.